Ford Motor reporting earnings moments ago. The automaker reported revenue of $33.3 billion with an adjusted earnings of 26 cents a share. That was above expectations. Joining me right now is Ford CEO Mark Fields in a First on Fox business interview. Mark, good to see you. Thank you so much for joining us.
Oh, good to see you.
Can you characterize the quarter for us? What were the highlights?
Well, the highlights for the quarter, we earned pre-tax of $1.4 billion. It was down from last year, but it was as we expected. In North America, we had some unique items. We were launching our Super Duty. We had a large recall that we announced during the quarter on a door latch, and we had some F-150 stock changes because of the launch that we had the previous year. But importantly, we had significantly improved earnings in Europe, record earnings in Asia Pacific, and another strong quarter from our Ford Credit operation.
Yeah, let me ask you about some of the items in the quarter. I want to ask you about credit, but first the production, because we know that you have already announced trimming production in North America amid concern about cooling demand. What can you tell us in terms of demand out there and where the production stands, particularly with the Ford F-150?
Well, when you look at the overall market, car industry market still is relatively strong, but we are seeing some weakness in the retail end of the market. We did take some production adjustments during the quarter, and that's very consistent with our strategy of matching production to demand. And in terms of our F-Series demand is still very strong. We saw a number of our competitors get very aggressive during the quarter in terms of incentives. But our share in that segment is actually up year over year, and we spend the least of all the major automakers in terms of incentives. So that brand and those sales are quite strong on our F-Series.
And you were among the first several quarters ago, to talk to the market about how things were looking weaker to you. Have things changed in terms of the broad demand story out there, Mark? Can you go through the U.S., Europe, what you're seeing throughout the world in terms of how it feels to you?
Well, it hasn't changed much since what we signaled in our second quarter earnings call. In the U.S. here, again, the labor market still is growing. The economic fundamentals are still healthy. The overall auto industry sales level is healthy, but what we are seeing is retail softening. We're seeing a tougher pricing environment. But overall, we're matching our strategy of matching production to demand to make sure our inventories don't grow. In Europe, we're continuing to see moderate growth across the continent there. In the UK, we've actually seen the industry not be too impacted by Brexit, but ourselves as well as others have started to price based on the weakness of the sterling, and that will impact the market going forward. In Asia, in China in particular, the market's very strong, particularly as we go into the last quarter, as that last quarter of what they call the purchase tax reduction is in effect. And so we think Chinese consumers are going to continue to come into our showrooms. Our sales have done very well there. And in South America, it still continues to be very tough based on the economic environment there, but we are seeing signs of stabilization.
All of this while you have been investing a whole lot in, autonomous cars, in new technology. Tell us where you are in that cycle in terms of investing in these things and what that will look like. How does Ford look different 2 years out?
Well, we are making a lot of investments in what we call the emerging opportunities, while at the same time making sure our core business is very strong and vibrant. And we made a couple of announcements during the quarter. We announced a shuttle company in San Francisco, and we'll be rolling this dynamic shuttle company out to over 6 cities over the next 18 months. And so our approach, very simply as a company, our strategy, and we talked about this at our Investor Day, is to strengthen or fortify our strengths around trucks and performance vehicles and utilities, but also transform the underperforming parts of our business, whether it be some small vehicles or some select emerging markets, and then grow in these emerging opportunities, which you mentioned, which is really around investments in electrification, in mobility, and autonomous vehicles. And we made the announcement during the quarter that in 2021 we will have a fully autonomous, what they call a level 4 vehicle, where the driver or the passenger doesn't need to take control in the market in a ride-sharing or ride-hailing service in 2021.
That's pretty incredible. What kind of an impact is that going to have, do you think? I mean, when you look at the overall earnings story, what part of it is that in 2 or 5 years out, 2 to 5 years out?
Well, when you look at 5 years out, clearly we're going to be growing these emerging opportunities as a significant part of our business. Right now, it's not material because we're making those investments. But when you think about autonomous vehicles, the impact that can have from a societal standpoint, from an environmental standpoint, and a safety impact, we believe that the automation of the vehicle is really going to be the story over the next decade and could have just as much fundamental change on society as Henry Ford's original moving assembly line.
Yeah, it's pretty extraordinary.